Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. We wish you a great year ahead. Today we're looking at stock name.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comments section below.
So let's get into the analysis.
Yeah, let's do it, because stock name feels like one of those really compelling, almost high-wire acts in the AI space right now.
It really does. You've got this massive strategic pivot happening, but at the same time, they're juggling these legacy revenue declines and, frankly, some pretty serious shareholder uncertainty.
So the goal here is to cut through that noise. Is all this volatility we're seeing a real warning sign, or is it, maybe a buying opportunity?
That's the million-dollar question, and I think to answer it, we have to start with the core fundamentals, because the latest quarterly report from Q3 2025 really sent some mixed signals.
It really did. So let's start with the headline number that probably worried people.
Right, so revenue came in at $33.1 million. Now, on its face, that looks bad.
Because it's a big drop year over year, right?
A huge drop. It's a 20% decline from the $41.5 million they did the year before. And, a 20% drop is tough for any stock, especially a growth-oriented one.
Okay, so that's the bear case. But there was a silver lining in that number, wasn't there?
There was, and this is a crucial detail. That $33 million actually beat what analysts were expecting.
Which was lower.
Much lower, around $31.8 million. So it tells you that Wall Street was bracing for something even worse, and they cleared that low bar.
And management seemed pretty confident afterwards.
Very confident. They came right out and reaffirmed their full-year guidance, which is still between $125 and $140 million.
That's a strong signal. To reaffirm guidance after a number like that suggests they see a strong Q4 coming.
Exactly. They're clearly not panicking. Now, the other big headline number was profitability.
Right, this is an eye-popper. They swung from a big loss last year, something like $15 million.
A $15.1 million loss, yes. And they swung to a positive net income of $2.5 million this quarter.
Which seems like an incredible turnaround.
Mm-hmm.
But we need to put a big asterisk next to that number.
A huge one. I'm glad you brought that up. That profit wasn't from, selling more software. It was almost entirely driven by a $26 million non-cash gain from derivatives. It's more of an accounting event than an operational victory.
So if you strip that out, they're still burning cash from an operations perspective.
They are. We're still very much in an investment phase here, not a profit-taking one.
But the thing that lets them make those investments, the backstop here, has to be the backlog.
Absolutely. The backlog is the security blanket for this whole story.
Yeah.
As of the end of September, it stood at $376 million.
So $376 million in future contracted revenue.
Exactly. When you have that much work already lined up, it gives you the breathing room to handle the short-term bumps and, more importantly, to fund your big strategic move.
And that move is the real core of the bull thesis, isn't it? The Ask Sage acquisition.
It's everything. This $250 million deal isn't just an add-on. It's a fundamental pivot for the entire company.
A pivot into the secure AI market for government clients, which is, what, a $20 billion space?
Over $20 billion, yeah. They're making a very targeted play to own a piece of that secure, high-stakes government work.
So let's break down the immediate impact. What does Ask Sage bring to the table right away?
Right away, it's expected to add about $25 million in non-GAAP annual recurring revenue this year. That's a nice, immediate shot in the arm for the top line.
But the real growth story isn't about this year. It's about 2026 and beyond.
Precisely. The projections are for, explosive growth once the integration is done. We're talking maybe a six-fold acceleration from 2024 levels as they start cross-selling this new tech to their existing clients.
Okay, a six-fold growth potential is huge. But it has to be built on a real competitive advantage, a moat. What makes their position so strong?
It comes down to switching costs. When you're dealing with defense and intelligence agencies, once your AI system is integrated into their operations, it's incredibly difficult and risky to rip it out.
So the contracts are just incredibly sticky.
Astronomically sticky. And Ask Sage brings something very specific to the table that deepens that moat.
You're talking about the FedRAMP High accreditation.
Yes.
Yeah.
For anyone listening who isn't familiar, FedRAMP High is basically the golden ticket to handle the U.S. government's most sensitive classified data.
And getting it is not easy.
Not at all. It's a multi-year, multi-million-dollar nightmare of a process. It's a huge barrier to entry that keeps most generalist AI companies, even the big ones, out of this specific market.
So by buying Ask Sage, stock name essentially bought its way into this exclusive club.
They did. Ask Sage already has over 100,000 government users on its platform. So this isn't a theoretical product. It's already deployed and trusted in the most secure environments. That's how they compete.
Okay, this all sounds great, but it also sounds expensive. A $250 million acquisition, scaling up. How's the balance sheet holding up?
This is the other part of the bull case that provides a lot of comfort. The balance sheet is rock solid. They hit a record cash balance of $456.6 million.
And they paid for the whole deal with cash on hand, right? No new debt.
That's the key. They funded the entire $250 million deal from their cash pile. Their debt-to-equity ratio is super low at just 0.18. They have flexibility.
But that spending has to show up somewhere. And it does in the cash flow statement.
That's the trade-off. Free cash flow is still negative. They are burning cash right now, but they're burning it on purpose to integrate this massive acquisition and chase that growth.
We also saw their operating expenses jump pretty significantly.
We did. SG&A expenses went from about $17.5 million to $25.3 million year over year. That's the cost of hiring new sales teams and scaling up the business.
So to summarize the financials, you've got this great cash position and a huge backlog. But the current operational margins are, let's say, thin.
They are very thin. Gross margin is only around 22%. But again, that massive cash reserve gives them the runway to get through this investment period. They have time.
Which brings us to the stock price. It's been all over the place. We saw a nearly 5% slide recently, even while the rest of the defense AI sector is up big for the year. What's going on?
Well, the market is laser focused on one specific issue, which we'll get to. But technically, the chart actually looks, pretty constructive.
How so?
Analysts are seeing a strong base of support forming in that 550 to 566 range. It looks like consolidation, like the stock is just churning and getting ready for its next move.
And what are the momentum indicators telling you?
They're hinting at a potential turn. The 50-day moving average is sitting right on top of the 200-day moving average.
The golden cross setup.
A potential golden cross, yes. If that 50-day crosses above the 200-day, it's a classic technical signal that a new major uptrend could be starting. Plus, indicators like RSI and MESI are looking pretty oversold.
And we're seeing high volume on the down days.
Which often suggests accumulation. It looks like bigger players might be buying into the weakness.
Which is exactly what short sellers don't want to see. And the short interest here is really high.
It's massive. 21.5% of the float is sold short. That's a tinderbox.
So any piece of good news could trigger a short squeeze.
A very aggressive one. It creates this coiled spring effect. But all of this technical strength is being overshadowed by one major risk.
The shareholder vote.
The shareholder vote. This is the single biggest cloud hanging over the stock right now. The company wants to double the number of authorized shares to 1 billion.
And the market hates the idea of that potential dilution.
Absolutely. The fear is that management is giving themselves a blank check to issue hundreds of millions of new shares down the road, which would water down the value for every existing shareholder.
Even though they have plenty of cash right now.
Right. It's not about an immediate need for cash. It's about the fear of that future possibility. That uncertainty is what's been pushing the price down.
And we have a date for that vote now.
We do. It's been reconvened for January 22nd, 2026. That date is circled on every investor's calendar. The outcome will be a huge short-term catalyst, one way or another.
Okay, so let's tie this all together. What's the complete investment thesis here?
I think the bullish thesis is straightforward, but it does require some patience. You have the $376 million backlog, the huge cash reserve, and this game-changing Ask Sage acquisition. All the pieces are there for a huge acceleration in 2026.
And what are analysts thinking in terms of price targets?
The consensus fair value is clustered right around $6.33. So from these current levels, that suggests a pretty decent upside if they can just get past this vote.
So 2 key dates to watch. The January vote.
And then the Q4 earnings report, which should come out in late February or early March. That will be the first time we get official guidance that includes the Ask Sage synergies. That's the real moment of truth.
So you could play this in 2 ways, really.
You could. It's set up as a swing trade into those Q1 events, betting on good news. Or if you really believe in that defense AI theme and their competitive moat, it's a multi-year hold.
It really all comes back to that core tension, doesn't it? You have this immediate fear of dilution versus a really compelling long-term growth story. The whole sector is moving towards this kind of mission-ready AI.
It is. The final question you have to ask yourself as an investor is this. Can the company execute this integration well enough and fast enough to make everyone forget about the dilution risk by the end of next year?
Because that execution changes everything. Well, if this analysis helps you think through that, please consider subscribing, liking, and dropping a comment to support our work.